Here's the thing nobody tells you about money. You could earn six figures. You could get raises every year. You could even win the lottery tomorrow, and you'd still end up broke. Sounds insane, right? But it's happening to people every single day. Successful people, smart people, people who should know better. There's one habit separating those who build real wealth from those who spend their entire lives chasing their next paycheck. And I promise you, it has nothing to do with budgeting, nothing to do with cutting back on coffee, nothing to do with any of that noise financial gurus love to preach. So what is it? Every single time money hits your account, before you touch a single bill, before you swipe your card, before you even think about what's for dinner, you move a portion of that money to yourself first. Not after expenses, not if there's anything left, first. Sounds simple, almost too simple. But here's where it gets interesting. Most people do this backwards. They pay everyone else first, the landlord, the car payment, the streaming services. Then they save whatever crumbs are left, which is usually nothing. And they wonder why they're stuck in the same spot year after year. But when you flip the script, when you make yourself priority number one before anyone else gets a cent, everything changes. Your brain stops seeing savings as optional. It becomes automatic, invisible. You don't have to think about it. You don't have to resist temptation. The money is already gone before you could even spend it. Now here's where this gets really powerful. There's this chart I came across. It shows how long it takes to reach financial freedom based on one simple variable: what percentage you pay yourself first. At 20%, you're looking at 41 years. That's basically your entire working life. Congratulations, you can finally relax when you're too tired to enjoy it. At 50%, 18 years. Cut your timeline in half. At 70%, 11 years. That's not a typo. 11 years until work becomes optional. And here's the part that blew my mind. It's not linear. Going from 10% to 20% saves you more years than going from 60 to 70. The biggest gains happen early. Small changes, massive results. But wait, what if you're in debt? This still works. Actually, it works even better. That money you pay yourself first, it goes straight to crushing your principal. Not just covering minimums, you're attacking the actual balance. The interest starts shrinking. Your debt disappears faster than you thought possible. What about emergencies? Same thing. That money builds your safety net automatically. No willpower required. No promises to yourself you'll break next month. Just consistent, silent growth. And here's something nobody talks about. When you pay yourself first, you stop emotional spending. That urge to buy things you don't need, it fades. Because the money isn't sitting there tempting you. It's already working for your future. The really wild part? Your income level barely matters. Someone making $20,000 a year who saves 50% reaches freedom at the exact same speed as someone making $200,000 who saves 50%. It's not about how much you make. It's about the ratio between what you keep and what you spend. Mr. Money Mustache retired at 30, a software engineer, saved 70% of his income. Vicki Robin, the woman who wrote one of the best books on financial independence, retired in her 20s. These aren't trust fund babies. These are people who understood one simple thing: pay yourself first, and time does the rest. So here's what you do. Start at 10%, maybe 15%. Get comfortable. Build that emergency fund. Then bump it up. Every raise you get, every bonus that hits, pay yourself all of it. Don't upgrade your lifestyle, upgrade your freedom. You don't need to be perfect. You don't need to be rich yet. You just need to start. Automate it. Forget about it. And let compound growth do what it does best. One habit. That's all it takes. The question is, are you going to keep paying everyone else first? Or are you finally going to pay yourself?